Welcome. I am the FX Savant, and in today's video, we have a short day trade breakdown using multi-time frame analysis and structure the right way. We have an NZD CAD example for about 25 pips or a 2R risk to reward. But before we get into the trade breakdown, I do want to speak to you a little bit. But before I get into that, drop me a like, subscribe to the channel, check out my website if you haven't. It's a really good website, at least I think it is. And with all that said, let's get into the video. So what do I want to talk about? What I want to talk about is what I would do if I were to start my trading career all over from the beginning. What I would do differently if I had that knowledge. So the number one thing that I would do, I've went on Reddit, I've asked in multiple threads, I've dropped multiple questions on things that traders wish that they knew or things that they would have changed when they were starting out their career. And I got a lot of different answers. But for me, what I've came to realize what would really help my trading career in the beginning when I first started out was to actually learn the skill. So not just know a little bit about it, but actually learn it, have a profitable system. I think in the beginning, I learned about Forex, of course, just like everybody does. Somehow online, make money online, you can make a lot of money. Someone somehow was making money being able to trade the markets from their home, phone, computer, laptop, wherever they want to be, as long as they have Wi-Fi. I was hooked. That was it for me. So I did my research, and I found that there was some truth to it, so that there was people actually making money. You know, of course, you jump into it, make some money, lose some money, make some money, lose some money. You start to think, is this a real thing? Is this a scam? Come down to it. After I thought I knew how to trade, of course, a week into looking at videos on YouTube, not really having a strategy going on and trying to find all the free stuff that I can. About a week into it, I'm like, I'm ready to open my real live account. I'm ready to make some money. Demo profits that I've been making need to be real money. You know, I'm barely using the stop loss, swinging 10 lots, just on a demo account, just, all right, I think I got it now. This making money thing is easy. So I put $300 into my first account. I made $7. It was in minutes. I had no idea what I was really doing. I just clicked buy. It went up $7. I closed out. And that's when I realized, yes, this is true. People can make money from it. But I didn't know the magnitude of how the market worked back then. Just a new trader, just like everyone else, just like you.
Oh, I'm golden. I think I know what I'm doing now.
No, you're not. You need to actually learn the skill. It doesn't have to be from me, it could be from someone, but you need to learn the skill, actually study and practice your craft until you get confident enough within yourself to know, okay, I'm ready to trade a live account. I have my mental down, I have my setups down, I follow my trading plan, my trading rules, I don't break my rules, I'm ready to go. I've traded demo and I've made profit in demo after a while. I've demo traded, which that's my second point. Utilizing the demo account is probably the biggest asset to a trader nowadays. They didn't have that a long time ago. Apparently, maybe 15 years ago, you couldn't just open a demo account and start trading the live market conditions with the broker that you were likely to deposit real money into to see how it would actually be if you're trading with them. That wasn't available, but now it is, and I don't think that people take that to its fullest advantage. Like I'm saying, actually study and learn your craft. That's what the demo account is for. It's such a blessing for traders. Open a trade. Yes, it's not real money. You don't really feel it. You may forget you have trades. You may do whatever, but if you start to treat it, once you get into the mindset of, I don't care if this is real money, fake money, play money, monopoly money, I'm going to treat it as if I would real money. Start to practice the way that you're going to play. Use your demo account until you are confident enough to say, hey, I'm so good on this demo account. I'm so good with my strategy, my mental, my emotions, and everything that I think that I'm ready for a live account. And then once that, no one can tell you when to go live. No one can tell you when to stop trading demo. No one can tell you when you're good. No one can tell you when you're really bad, maybe. But the thing is that it's personal to you. It's not going to be the same for me as it is for you. For me, it may take however long. For you, it may take however long. But just because it took you a certain time and me a certain time doesn't mean that either one of us are bad traders. We're both great traders. We got to the point to where we want to be, and that's all that matters. You don't make the money and give it to someone else. You trade, you make the money, and you keep it. It's for you. This is your trading. It doesn't matter how anyone thinks or how anyone feels. That's all I really want to do on that little spiel. So let's get into the breakdown. I'm gonna try to make this fairly quick. And this is the day trade. So this is the NZD CAD day trade that we have for about 25 pips with about a 2 risk to reward. And in this specific video, on top of talking to you about delayed gratification and using your demo account, I want to speak to you about using everything that you know. So when you're learning about the Forex market, you want to eliminate the things that don't work, use the things that do work. So here I want to take you through. Let's go back on the daily. As you can see, this little trade here hit TP very nicely. Once we started going, we'll go back one day. But this time we won't start from the monthly, we won't start from the weekly, but what we will do is start start from the daily. So on the daily, what do we see here? Well, impulse corrected impulse on the daily to the upside in a downtrending market. So this market has been bearish. We have been creating lower lows and lower highs in this market. Found a support area right around in here. We've been making higher highs and higher lows ever since. We made higher highs and higher lows out of this structure area, broke structure out of it. And then once we did, we immediately broke back into the area with an impulse correction and impulse all the way down to our starting area of where this whole move to the upside started. So let's mark that out. Let's put our just little box over that. We'll just say like, okay, here the market has found support on the daily. We know from our head and shoulders pattern that we usually have a bearish formation or a bearish move if we have price that breaks structure to the upside, creates an impulse correction, impulse pattern, breaks that to the upside, then immediately comes back into the area of the left shoulder and then fails to make a higher high as well, but making a correction and an impulse to the downside. We want to see price continue to the downside. But before we get ahead of ourselves and just randomly place a sell, we can identify a head and shoulders pattern, which is also an M formation. And after an M formation, you expect the market to come complete and retest at the neckline. So knowing that on the daily, the market can't move in one direction forever, giving us a correction. So here we have start of a correction, but not to be confused, and I don't want to confuse you. Yes, we also have a black candle that completely engulfs our correction, our start of our correction. But what I do want to make note of is that it doesn't break and close below the low. Here we are in a situation to where the market has been making moves to the downside and has found support in this area and started to create higher highs and higher lows. We thus created an impulse correction to the upside and broke back into the range, creating an impulse correction to an impulse to the downside. And from there, we found our most recent support level, and from there, we're just stalling. So what can I identify? Not only did we have a short-term head and shoulders up here at the top, but from just an overall perspective, if I was to look at this market, I can also see that this market created a bigger head and shoulders on the daily time frame. So we have our left shoulder here, our head, and what we expect to be is a retest of the right shoulder that does not break above the left shoulder to continue movement to the downside. So with our areas marked up, let's move down to the 1 hour, which the 1 hour, we went from the daily to the 1 hour I did. And what can we see? Well, on the 1 hour, prices making lower lows and lower highs, breaking structure to the downside. And not until we get to this area, this point, to where we fail to continue to make lower lows and lower highs. So we're just keeping that in mind. That has nothing to do with anything right now. We still have our areas, our zones marked out. This was our support on the daily, and this was our left shoulder resistance that we would like to see price come and retest. But price on the hourly has been making lower lows and lower highs. So we started here, we made a high, made a low, came back. We did not break the high, but what we did is break the low and close below the low. So we are in a bearish formation. Do we want to buy this market? No. Would we like to sell this market? Yes, but we know the market can't go in one direction forever. What we would like to see is a correction before we get short, but we can take advantage of that correction. We have an area where we would like to see the correction come to, and we have support, which is holding the correction currently. I mean, it's kind of below, kind of in between, but this is an area, of course you learn that. We are currently at support in between this resistance. We like to see price come and retest. If we play it forward, what can we see? Price starts to break structure to the upside. Perfect. Well, on higher time frames, we identified that price has been making moves to the downside. Yes, but price is overextended to the downside. What would we like to see price come and do? Come back and give us a correction. Well, if we want to buy a market, we don't want to be selling we don't want to be buying in a seller's market that is creating lower lows and lower highs. We want to wait until we start to create higher highs and higher lows. So what do? We see that price had created a higher high, broke out of this, did not create a lower low, and then we broke and closed above this area, creating another higher high, another higher high. So we're creating higher highs, and this low did not break but enclosed below this low. So now we're creating higher highs and higher lows on this market. As long as this next correction does not break below this low, we are in a bullish market, a bullish formation, bullish market structure. So if we play it forward, what can we see? Price is holding. Oh, we had this candle come and retest down here. We had candle break the lows, but we didn't close below the lows. We had the candle, the next one's supposed to fill in the wick. The wick gets filled, but we did not break and close below the lows. Because if we break and close below these lows, we're going to continue in our bearish market structure. continue to the downside, and we'll be looking for sales. But right now, price is holding. We know that this is our support area. We know price is not making lower lows. This is the area we're not making lower lows. We know that this is our support area. And what we want to see is price not make lower lows, but continue to make higher highs and higher lows on this market. So a failure to make a lower low would not classify as a higher low. Just because the market failed to make a lower low doesn't mean that it can't. But in this situation where we're using everything that we know, well, we know that we like to see M patterns complete at the neckline, which means that we also like to see W patterns complete at the neckline. If we look here, we have the market that created an impulse down, push back up, push back down, push back up, creating what type of pattern? We would like to see it come retest where? At the neckline. As long as we don't break below that, what are we initially in? We create the most common pattern in the market. By creating the most common pattern in the market, the impulse and correction, we can see that just our W formation is just the most common pattern in the market that completes at the neckline. So using the information that we know, we can see that we have a W formation. Yes, our neckline is kind of in here. We're kind of below the neckline, but remember, this is an area. This is just an area. It's not an exact point on the chart. So we're failing to make lower lows in this area. And if we take our fibs from the low to the high on this impulse to the upside, what can we see? We can see prices stopping right around the 50%, which is not a Fibonacci ratio, but it is half of the move, which is a very important level within itself. Okay, all that being said, taking all the knowledge that we know. So we identified some things on the daily, identified some market structures on the hourly to confirm our bias of seeing the market move to the upside. And let's drop down to the 15 is in a little more detail. And this is the area where we want to potentially see the market break and close above. Because once market breaks and close above this resistance area, now we're free. We've been making higher highs and higher lows, higher highs and higher lows. We would continue this market to actually be the correct time that the market wants to make a push to the upside. We entered on previous resistance, now turn support. Where do we put our stops? Where do we put our targets? Well, we have our entry low right around in here. So we put our stops below the low. We took our targets on the minus 27 retracement of the overall impulse move. We found our targets. We entered on previous resistance, now turn support, somewhere right in here. I gotta pull it up. You already know what's coming. This week was a really, really good week. From AUD, NZD, NZD, JPY, CHF, JPY, NZD CAD. What else I got coming? GBP CAD. This was all within a week. We smashed this week. Pro signals. You don't have to join. I'm not saying go join. I'm not telling you, but I'm saying that these trades were sent to the pro members. This was not in the free, I don't think. So go ahead. I'm telling you. Let me see. Where's NZD CAD? Was sent at 5:19 on May 5th. The setup by 8811. Everything here. And now let's play it forward and see what happened. Nice and easy. Stop loss well protected below structure. Price up in here. We're going risk free and not too short after we went risk free. Had a little retracement, little correction. Price then hit our TP, a nice 2R hit. And that's really it, man. It doesn't have to be complicated. Trading needs to be simple, but you need to actually do the correct things, the cliche things. Journal your trade. I have my trades journaled. This is my journal. I'm using this as my journal to journal my trades. The signal chat is my trading journal. I'm sending the trades that I'm taking there. I'm reviewing them on YouTube, going after them or going over them after the fact and reviewing what worked, what didn't. How did I approach this? What was my mentality? Now I'm doing it a little different for YouTube, for the videos. I'm not giving you everything that I was thinking, but I'm giving you the main keys, things that you really need to look at when you're looking for a profitable system or a consistent way to trade to become profitable. You want to make it simple, do the same thing over and over and over. It's not very hard. Learn structure, learn market structure, and then try a few things out. Learn a few patterns, look at the market. What do you see happening over and over and over? And take that, apply it, test it, back trade it, demo trade it. When you feel confident enough and you say, hey, I know that I'm not going to win every trade. I may lose 50% of my trades, but I'll win 50% of my trades. But I average over a 1 risk to reward, so I'll come out profitable. I average a 2 risk to reward or a 2.5 risk to reward on all my trades. I don't take anything less than a 1.5 risk to reward trade. And I know that I have a 55% chance of winning that trade just over the past data that I've taken. You go about it like that, approach, simple. I can help you if you need to. Check the website. I have mentorship, we can do a little sessions. I also offer the signals, but it doesn't need to be complicated, man. This was an easy trade, little day trade. I found it fairly simple. I found it fairly quickly the day before. That's it. That's really the video. I just wanted to show you how I got into this trade, how I found it, and how I took advantage of it using multi-time frame analysis and structure the right way. I also wanted speak on a few things that I think would really help new traders in their trading career. There's no pressure. This is your career. This is your trading. Don't let anyone or anything that you see make you feel anxious about your trading. It's yours and yours only. So with that said, hope you have a green week. Hope you have a green day. And overall, I hope you are profitable. I'll holla at y'all, man.